Hello traders, the title of the video is Elliott Wave Strategies, Exxon Mobile Stock Wave Strategies. Let's get started. The financial instrument that we are analyzing is Exxon Mobile Corporation, EPIC XOM, X-ray, Oscar, Mike. Alright, I'm going to start my wave count, what I like to call a top-down Elliott wave analysis, which means I'm starting my wave count from the higher degree and then bringing it down to the lower degree. We can have, a down top, wave count, which means we start from the lower degree and going to the higher degree. Alright, I prefer the top-down Elliott wave analysis strategies. Alright. So here we are on the yearly chart. So I always have on my yearly chart, because I want you to understand how I use account wave. There are a few things that I'm looking for. So I go to the yearly chart, because the yearly chart allow me to quickly see the wave, and then I break it down to the lower time degree to see the internal wave, So I'm looking for few things. This is a very interesting case here. That's why I'm recording this video today. It's because the stochastic 833 was overbought for a long time and now it's coming down. The first indication that we have here is telling me that this is a very strong bullish financial instrument. When the stochastic stay almost overbought from the first wave to the fifth wave. You see here? From here all the way up here. That looking at the stochastic that stay overbought like this on the yearly chart is telling me that this stock is very bullish. Alright. So the next thing that I would deduct from that information, so you have one information, what can you deduct from that information? This is one exercise that an Elliott wave trader should train himself to master. The Elliott wave analysis, allow us to have some clear-cut information to interpret the price. But now, the next step to improve or to become a better Elliott wave trader is to make a deduction. Something happened. Now we want to deduct something from it. All right? It works both ways sometimes when we go like this, both ways. Deduction one direction, deduction on the other direction. In French, we say si et seulement si, if and only if. This is the sign for if and only if. So that kind of exercise, because a lot of people are using the Elliott wave principle, but they don't deduct things. All right. So now that you see the stochastic stay overbought like this, we can deduct something. What can we deduct? We deduct that this stock, because it's very bullish, if a correction is finally underway, there is a high chance that most investors will try to buy it at the sweet spot Fibonacci trading zone, which means the zone between the 50% and the 61.8% Fibonacci retracement of the multi-wave. There will be definitely buyers in that zone. That's the first deduction that we can make from a stock when we see the stochastic 833 staying overbought throughout, the whole multi-wave. Alright? The next thing that I want to share with you today, on this yearly chart, it's quite easy sometimes on the yearly chart to make a mistake, because now a trader may say, George, what I see on this chart, it's not a big mistake, alright? It's not a big mistake. They'll say first wave, alright? That's what they will say, alright? The second wave, and they will say, alright, George, this is the third wave, and they will say, all right, this is the fourth wave, all right. They say this is the fourth wave, and they will say, all right, George. Oops, what have I done? Let's go back to the yearly chart. I've done something very interesting, all right. So, and then they will say, this is the fifth wave. All right? It's not a bad mistake as such. It's not a bad mistake as such. Now, then, after they said that, they will have to check whether there is an Elliott wave violation. There's no Elliott wave violation because the third wave is not the shortest multi-wave. All right? It's not the shortest multi-wave, and the fourth wave is not overlapping the first wave. So they will say, all right, everything is working beautifully. But the wave count that you see here is wrong. It's wrong. It's wrong. I know that it's wrong. All right. It's wrong. This is not the second wave. The second wave is here. It's a very tiny second wave. And this is the first wave right there. Very tiny second wave. Feel free to disagree with my wave count. This is the third wave right there. And this is the fourth wave. And the fifth wave is there. All right. Now, because here, whilst this is happening, the reason why I quickly detect that is because of my experience. Because stochastic is still overbought. If it's still overbought for too long, now you can see that for the first time it displayed quite a low. This was the prior low. Okay, now it went quite deep. It's telling me that this section here probably is a corrective wave. Well, feel free to disagree with my wave count. So suppose you count it the first time as you did, you put here the fifth wave, or suppose you agree with my wave count. What you need to do is to drop down to the monthly chart, starting what we call the Elliott wave validation, looking at the internal wave. All right. All right. In fact, this is what usually happens on the yearly chart. In fact, the first wave is here. I will hold on, please, readers, because this is my preliminary wave count. It's not looking good, isn't it? It's not looking good, all right? It's not looking good. If you see on the yearly chart, it's not looking good, isn't it? It's not looking good. A lot of traders will say, Joe, you don't know anything. But I want to show you why I'm getting to why I'm calling here the second wave, which is crazy, in fact. I'm going to go back to the monthly chart, and you'll see now. The reason why oh, 94. Okay, 94 is here. Second wave is here. That's it. Because of the market reference 94, 93 to 94, we have a market correction. All right. From 2000, okay, you see here, this is 2000. Here, this one's corrected from, in fact, from 2000 up to 2003. All right, we have a bullish commodity boom in 2003. This is about financial market reference. All right. But if you look at this section here, does it look like an impulse? Well, it looks like a 1, 2, 3, isn't it? On a monthly chart. All right. But don't worry too much about it. You will come across some wave count that will be very, very challenging, which means yourself, you'll be thinking, is it correct? Is it not correct? Do I have enough data or not? The most important thing is that you are not violating the market pattern. But if you are in a doubt, all right, you have to use market reference. 1993, 94, we have a correction in the financial market. We know that in 2000 to 2003, we have a correction. From 2003, we have the commodity boom. In 2007, we have a market correction again here. All right. So if we go back again to the yearly chart, okay, here it is. First wave, second wave, third wave, fourth wave, and the fifth wave. No Elliott wave violation. The third wave is not the shortest motive wave, unless we are missing some data here. All right. And all right, the fourth wave is not overlapping the first wave. All right. On the yearly chart, it looks good, isn't it? And now we have a flat correction that is developing here. All right, 1, 2, 3, 1, 2, 3. And the price is now in a corrective wave. We are expecting 1, 2, 3, 4, 5 move down. So 1, 2, 3, 4, 5 move down. All right. Going to go back again to the monthly chart, talking about Elliott wave strategy, Exxon mobile stock wave strategy. Why are we analyzing Exxon mobile? Because it's a market indicator for the Dow Jones index. So if you are trading stock indices, if you are trading the Dow Jones index, Exxon mobile is one of the Dow 30 stock index indicator, if you must monitor the structure of ExxonMobil if you are trading, okay, a Dow Jones index, or ExxonMobil price structure will help you to predict or to trade correctly the Dow Jones index. So it is an essential stock to analyze. Professional area weight traders that are trading the Dow Jones index will always analyze ExxonMobil. Alright, so if you are set my wave count, we are now in the corrective wave 1, 2, 3, 1, 2, 3, and we are setting 1, 2, 3, 4, 5. Alright, something like this in a normal correction. As I explained to you, looking at my stochastic A33, that stays overbought for the duration of the multi-wave, it looks to me that this ExxonMobil, okay, has a high chance to find buyers, all right, in a zone of 50% and 61.8% Fibonacci sweet spot zone. This zone here, between the level of $50 and the level of $38. All right, so we will expect the correction not to go beyond the zone of $50 and $38. All right, because of the strength of the bullish momentum. All right, looking at the stochastic on the yearly chart, that's the deduction that we can make at this junction. So what should we do now? Even if you call here the fifth wave, or you agree with my wave count, the next step is to draw channels. All right, so we can draw one first. Hold on, please. I'm going to draw them all with a preliminary trend line. Or I draw them like this. That trend line is very, very important trend line. You want to have it on your chart if you are trading. Okay, that's the pink trend line. And then we have another trend line like this, because during the corrective phase, you need your trend line that will help you to make excellent decisions. I'll color it also into pink. You see the exercise that we are doing now? All right, the deduction that we are making, and I'm connecting now this point and this one here, and again I'll color it into pink. Now another thing that you need to do when you are thinking of a flat correction, so this is the A part of the flat correction from here down to here. That's the A part of the flat correction. This is the B part of the flat correction. Now you can do something like this, which we don't usually do. Okay, I'll repeat that, we don't usually do. Apply the pitchfork tool. It's not the correct way to apply the pitchfork tool, because this one went above the high, but we understand more because it's an expanded flat correction. The price went back above the high of the fifth wave. Normally, the retracement should not go beyond the first point of the pitchfork tool. But when we are dealing with an expanded flat correction, we can violate that rule of the pitchfork tool. All right? You see now? So you see how the price came down? We test the median line of that pitchfork tool. So after this move, 1, 2, 3, after the A wave and the B wave, apply the pitchfork tool like this. Now you see here, 1, see now, 2, try to, so you tell the median line, bounce up. Now you try to come probably to the edge of the median line, bounce up, okay, and then down. We will see, one step at a time. So once you are satisfied with your wave count or your wave validation, all right, you switch your attention to the current price structure, drawing your trend line like this, all right, and then the pitchfork tool, especially if it is an expanded flat correction, and you trade on the edge of the key level. Apart from those trend line, you want to know where are the horizontal key level, which I already have on my chart, you see here. And the intersection between the trend line on the horizontal trend line and the horizontal trend line are a hot spot. So you see here, this was what we call a hot spot trend. So you see, in fact, we have three lines coming together here. Beautiful hot spot trading zone. If you place the trading volume there, you'll see that there will be a surge in trading volume at a hot spot trading zone. All right, are you with me? So there are other hot spot trading zone. There is one here, intersection. There is one here. All right, there is one here, hot spot trading zone, and there is one here. You see again 3 points here. Will it come all the way here? We will see. All right. So this is just a short tutorial, all right, about Elliott wave strategies, all right, Exxon mobile stock wave strategy, all right. The Elliott wave principle allow us to interpret the price, all right. Once we interpret the price, which we get an information, all right, we need to switch in the mode of a deduction. So you want to deduct it one way, which means from the right to the left, and also from the left to the right. All right. So the deduction that I make on the yearly chart, all right, is that because the stochastic stay overbought during the whole multi-wave, all right, it's still overbought during the whole multi-wave, there is a high chance that the corrective wave will find it. There's a high chance that the corrective wave will find it very difficult to go below the sweet spot Fibonacci trading zone, the zone between the 50% and the 61.8% Fibonacci, all right, retracement level of the whole multi-wave. So when ExxonMobil reaches that level, all right, there is a high chance, all right, that it will find support. There will be buyers. Probably will have a new trend, or the correction may end up being prolonged. We may have a triangle or a consolidation after the flat correction is completed, depending on the market environment and the fundamentals of ExxonMobil itself. All right. So this is just a short tutorial. Is it short enough? 70 minutes. All right. So call it short. Right. About Elliott wave strategies, ExxonMobil stock wave strategies. Right. Have any question or suggestion? Please put it in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video useful, please give us the thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott wave strategies, ExxonMobil stock wave strategy. Please subscribe to our channel today and make sure you click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. Happy trading to you all, and I will speak to you soon. Thank you for watching.